Let's take a look at some charts on SNX, Synthetix Network, from this week's article on Brave New Coin. So if you're familiar with MakerDAO and DAI, as far as using ETH or a few other currencies as collateral, a few other ERC20 tokens, the DeFi ecosystem has broadened that idea, adapted it in a few ways. SNX being a sister or a cousin to MakerDAO in my mind. Aave, which is coming tomorrow, an article on that, very similar to SNX. So it's a lending and borrowing platform. The token is used for staking and governance. Now, SNX has gone through a few changes over the years. They initially had a foundation. They dissolved that into 3 different DAOs, which is probably the way to go anyway, based on what people who work for foundations tell me, that their lives are miserable and it's just better off just trying to figure out a decentralized solution to that sort of stuff. If you look at their governance in SNX, I actually really like how I do a lot of these articles, okay? I like how they have their stuff set up. I can look at all the governance. I can look at all the improvement protocols, SIPs, if they call them that, I think they do. I can look at their governance stuff, their protocol stuff. You can see all of your lending and borrowing stuff in this dashboard. You can use the synths, as they're called, the synthetic assets, across the DeFi ecosystem. All this stuff is non-custodial, decentralized, open source. So collectively, all this stuff is great. I don't know which one's going to reign supreme over time. It's great that there are multiple competitors to keep each other honest as well. They have various fees related to them. They have various collateralization ratios, liquidation criteria, all that sort of stuff is dependent on the platform. And of course, you can access all this through a software wallet or a hardware wallet. If we look at the amount of value locked in SNX, it's currently reported around 120 million, according to DeFi Pulse. I think this drop may be related to SNX's recent addition of ETH Layer 2 stuff. So I don't know if the ETH Layer 2 SNX staking mechanisms are counted here. If this was the reason for the drop, I'm not really sure. But something unique for SNX that I've noticed so far is that they have plans already to migrate to ETH 2.0. So you can stake on the ETH 2.0 pre-network, basically, proto-network called Optimistic Ethereum. So 120 million SNX locked, and the total value of that is between 1.5 and 2.5 billion, somewhere around 2 billion, something like that in notional terms. And you can see just how crazy this stuff has gone off over the past 18 months, sure, but over the past 7 months, it's absolutely skyrocketed in use, in household name, in knowing what to do with it. It just seems like everybody is looking at DeFi, traditional people, ultra high net worth people, retail people. Anybody's looking at DeFi stuff these days. If we look at the transaction count for the token, that has risen very quickly as well. Average transaction sizes way up as well. A lot of this is related to price, but it's also just usage of the network and the token. This spike in mean transaction sizes may be related to ETH 2.0 staking stuff. I'm not quite sure because it went straight up, straight down. That's typically not necessarily organic or some sort of custody thing, which is basically what the 2.0 SNX staking mechanism is. So nevertheless, all this is incredibly bullish. Seeing up and to the right, that's exactly what you want to see with any token. Now, if price is rising to all-time highs and on-chain stats don't really support that, then there's a bearish divergence there, obviously, but that is not currently the case with SNX. Here is NVT, inverse metric of economic utility, and active addresses. You can see active addresses way up over the past few months. Very bullish. NVT sort of falling over the past few months, rising again with price and falling again. So all this tells me that on-chain activity is still vibrant and robust. Now this may be slightly off of reality based on, whatever this giant move was here, custody or whatever, that's going to affect NVT and bring it lower than it actually is in reality if that's not an organic transaction. So we'll know in a couple weeks what NVT really is, but falling NVT is bullish, flat NVT is neutral, rising NVT is bearish. So to see transactions and active addresses all the way up there, very, very bullish. This is one of their GitHubs. It is fairly active. All I really care about is quantity, not really quality. So very clearly there's dev work going on there to some degree. As far as Google Trends, it's hard to look up Synthetix. Maybe I should have included that, but I just didn't because I figured it was kind of a real word anyway. But my guess is the Google Trends are at or near all-time highs. If we switch to technicals, this is on the 12-hour Poloniex chart because Polo had the most data, not necessarily because they had the most volume or anything like that. I believe Polo was one of the first to list SNX, which is why they have so much more data. With some of these coins that are new, you can't really look at the daily because you can't use your high time frame indicators like I do. So you have to focus on slightly lower time frames and just try to find the exchange with the most data, even though you may not trade there. For me, it's just super valuable to see all this stuff zoomed way out. So very clearly we're above any sort of volume support resist level. We are above this previous massive block of consolidation that could be thought of as an inverted head and shoulders fractal. Just getting a series of lower lows and then a series of higher lows at a horizontal that broke out. You have a 5200 bull cross here. You're well within yearly pivots. So what I basically said in the article is, all this stuff is super bullish. Obviously, it's a buy and hold situation. Your supports are at all the pivots on the way down, the 50 and the 200 here on the way down. Your resistances are at 20, 25, and 30 based on yearly pivots, based on psychological resistance. There's a bit of a growing bearish divergence here in a falling RSI, rising price. So I really like SNX at 11 as a sort of a rebuy because the buy and hold case gets weaker and weaker as this bear div just continues and continues. Now this can get canceled out if RSI suddenly makes a higher high. Regardless of price, you could say, okay, the bear div is probably gone, bullish momentum is back on the table, and this is likely to go to 20, 25 before 11. But trend-wise, this looks really good. On the cloud, this looks really good. The Kijun support is at 1250. Price isn't too far away from anything. Obvious breakout in late November, early December with the Kumo breakout. You can see the head and shoulders thing a little bit better here. And off to the races it's been over the past few weeks. And something else that is helping this is obviously just DeFi is having a bit of a moment right now everywhere. So a rising tide lifts all boats, including SNX. As far as a high for the year, anything past 30 is generous. So 2x from here, based on the R5 yearly pivot. This is SNX BTC, also very near all-time highs, probably approaching all-time highs today. The same support resist conversation is true. The same trending conversation is true. Above the cloud, above the 200. Okay, it's bullish. We have rebuys at the Kijun here at around 40k sats, tons of volume at around 35k sats, yearly pivot at 30k sats, 200 at 33k sats. So there's tons of support on the way down. The resistance on the way up is, for the most part, the all-time high, the yearly pivot at 59k, and the R2 somewhere around 100k sats. And oddly enough, there's no bear div on this at all with higher highs in price and higher highs in RSI. So collectively, SNX looks really good in fundamentals, looks really good in technicals. On-chain stats are vibrant. Although it's a newer lending and borrowing mechanism, people are obviously using it. It is quickly becoming a big part of the DeFi ecosystem. It's got competition, which is good. So as long as lending and borrowing on-chain remains popular, stays popular, there's a weak regulatory risk to all this stuff, obviously in the US. I think that kind of goes without saying, but nonetheless, if the speculative froth continues, stuff like SNX should do very well in the near future.